Over 80% of Canada is deemed uninhabitable, so there is no surprise that a large majority of the Canadian population is concentrated on the US border. The business acumen of their neighbor seems to have rubbed off on the South, making it an attractive destination for people seeking work. However, the concentration of the Canadian population raises eyebrows. Of the 13 states in Canada house less than 1 million people each, with 3 of them hosting less than 50,000 each. This is a concerning figure for people looking to move to Canada. With such a large segment of the population concentrated in fewer than half of the states in the country, economic activity and housing prices are bound to be on 2 extremes, with demand being focused on the South and the rest fairly neglected due to unlivable conditions. What is even more disturbing is the spike in real estate prices in Canada. According to this graph, post-COVID, the new housing price index has grown sharply by nearly 25%, owing to more investments being funneled into real estate compared to businesses. This has shaped up to become a housing bubble that, upon bursting, could have disastrous implications on the Canadian economy. Like and subscribe to the channel if you haven't already, and stay tuned for a breakdown of Canada's surging and plentiful problems. The housing market bubble. Real estate is seen as a stable investment, not only in the West, but also the rest of the world. However, real estate does not offer as much value to an economy as it does to individuals looking to buy and sell. Outside of real estate firms and construction builders, land does not play a major role in making a country richer. Canada may have a lot of land available, but it is largely uninhabitable. This further stresses the need to strike a balance between residential and industrial land. Real estate, rental, and leasing contributed 266 billion Canadian dollars to the Canadian economy for the 12 months ending in July 2023. This is about 36% higher than the share of the manufacturing industry. This, coupled with the fact that GDP for the manufacturing industry dropped by 0.2% in the same time period, while that of real estate rose by 2.4%, shows that land that can be used for value-creating businesses is instead being used up by residential homes that create little to no value for consumers. According to Reuters, the Manufacturing Purchasing Managers Index slowed by a 3rd straight month in July 2023. The PMI was recorded at 49.6 for July and 48.8 for June. For reference, any value below 50 is recorded as a contraction of the industry in question. Foreseeing a crash in the market that fetches most of your income as a country should ring alarm bells. But things are yet to boil up. For now, this is a double-edged sword. Although a drop in returns in the real estate sector may contribute to more investments finding their way to other, more productive industries, this could also lead to a drop in gross domestic product, GDP, subsequently leading to a drop in GDP per capita and even lower earnings. Although GDP is not the be-all end-all for calculating a country's economic health, it is the only widely recognized indicator we have, with post-pandemic inflation and real wages exhibiting a growth of only 1.8% post-2011, compared to 60% for the same time period for their southern neighbor. Canada is projected to show the lowest GDP growth of all advanced economies in the next decade. But this is not entirely the fault of the people who are working very hard for their income. Burning of capital. For the sake of comparison, according to the OECD, the United States of America has a household disposable income of $62,300 US, compared to Canada, which stands at $38,900 US. Furthermore, the average household savings of Canadian families have dropped to half of what they were in 2021, lower than that of Hungary, which is ranked as the 53rd largest economy in the world. In comparison to Canada, which is rated as the 9th largest GDP, fewer income saved means fewer income invested. More importantly, less disposable income means tighter budgets and less money available for luxuries. This is a major drive for Canadians to tilt towards investment in real estate rather than capital markets, which involve higher risk. Between lower wages, conditions that are not conducive to productivity, and lack of savings, Canadians are seemingly being backed into a corner through no fault of their own. Speaking of capital markets, the United States of America has two significant stock exchanges, namely the New York Stock Exchange and the NASDAQ, both of which have an overall market cap equal to 5 Toronto Stock Exchanges combined. Unfortunately, without enough investment into capital markets, business is bound to dry up, which will contribute to fewer job openings and a rise in unemployment. According to Forbes, Canada's immigration numbers are due to 500,000 in 2024. And now more than ever, it is crucial to attract investments to avoid an economic meltdown. Population growth and what that means for Canada's economy. It all comes down to housing. If people do not have a roof over their head, there is no way they will be able to perform their day-to-day duties. Furthermore, rising housing prices put a greater strain on the budget of households. This can further affect productivity negatively. In fact, Canada has registered a negative productivity growth in 8 out of 9 quarters since 2021. In contrast, the United States has registered only 4 such negative quarters. One of the many reasons that Canada makes a case for being one of the most immigrant-friendly countries in the world is due to its free healthcare. But with the rate of which immigration has grown in North American territory, it is only a matter of time before staffing issues will find a way to haunt the country. According to an article in the New York Times, many emergency rooms have been forced to close due to a shortage of workers. This shows that the issue of understaffing, which has plagued the NHS, is likely to rear its ugly head in Canada too. A more prevalent issue is the long wait time for treatment. In a survey conducted by Waiting Your Turn, it was observed that in 2022, a median time of 27.4 weeks was recorded between referral of a general practitioner and receipt of treatment. Immigration, blessing or Achilles' heel? Canada looks to be heating up its drive to gain as many skilled immigrants as they can, but can they sustain such an influx of foreigners without their economy buckling under the pressure? Canadian lawmakers tend to think targeted immigration in industries that have a shortage of workers will help plug the gap of workers in the economy. With all the data presented earlier, that seems unlikely. With an ever-increasing workforce and poor GDP growth numbers, Canada needs to find a solution, and fast. There is no doubt that once all the immigrants who have moved to Canada for better opportunities compared to their home states see that the situation is deteriorating, they will likely want to go back or seek better opportunities elsewhere. According to CEICdata.com, post-2020, we have seen the debt-to-GDP ratio grow 73%. In an economy that is already struggling to create new jobs, this is a concerning figure. Higher taxation is on the cards, and any attempts to control immigration is met with vehement opposition. Canada seems to be at a crossroads where they have to choose between the lesser of two evils, but lawmakers seem to be at a stalemate. Meanwhile, the people continue to be dragged down a hole they have no idea exists. With ever passing day, the housing crisis is not getting any better either. New immigrants are finding it hard to find places to stay, and higher demand is driving prices through the roof. This is especially challenging for new immigrants, who would rather move back to their home countries than to face such a challenging and competitive market as soon as they land on Canadian soil. The only thing that Canada has going for it is a workforce that continues to grow, but in the event that immigration dries up, what hope does the Canadian government have of keeping their economy from sinking? Without having their basic needs taken care of, how can people hope to compete in the job market where it is already not easy going? How will Canada fare in the coming decades? Will we see them maneuver through the doom and gloom that is looking to engulf the Canadian people? Let us know your thoughts in the comments below.